Hey everybody, welcome to another episode of the Moving Markets Podcast. It's actually Saturday the 10th. This is the market update and the recap for the 9th, but I was out of town all day yesterday, so got back today, and we're giving you the weekly recap. I'm going to do something different for those of you that are not members of Safe Option Strategies. I'm grateful that you tune in and listen to this podcast. I hope you keep coming back. What I'm going to do is share with you today the exact presentation that we do for members of the program. So you're going to get a lot of information and updates on trades that we're doing so that you can get a little bit of a feel and see a little bit the type of trades that we send out to our members. Every time I do an introduction to this podcast, I try to remind you to go to our website, sostrades.com, take a peek at some of the membership packages we have, some of the different choices that you have to learn the way we trade. The people that are following our trades, the members of the Safe Option Strategies program that are following our trades, are doing incredibly well. We've got a phenomenal track record. Year after year, we post gains that are at least double what the market averages are, and in some cases, much, much more than that. As good as the stock market was last year, we more than doubled it. I think we almost tripled it in terms of our overall annual returns on the trades that we send out to our members. So enjoy the rest of this presentation. Make sure you go to sostrades.com. Make sure you subscribe to our YouTube channel or give us a like if you're looking at this on some other platform. Go to SOS Trades. You can catch past episodes of our podcast, see information about the trading programs that we have and training programs that we have. And I hope you're having a great weekend, and go ahead and take a peek at exactly how we present this information each week to the members of our program. Hi, everybody, to another episode of the Moving Markets Podcast, the Safe Option Strategies Daily Market Recap. I am recording this late in the evening on Saturday, February 10th, 2024. Glad to have you here. I know most of you will be listening to this probably on Sunday because it's, like I said, pretty late my time already. But still very glad to have you here. Listening in and tuning in. Let's start, as we always do, with kind of updating some things that are going on specific to Safe Option Strategies members. We want to start there and bring you completely up to speed on what we've got going on. To start with, let's start by talking about where we're at currently with a couple of our spread trades. I'm thinking specifically, let's talk about JP Morgan. By the way, on Friday, I know a lot of you are still in the Levi trade, and I'm going to continue to monitor and follow this Levi trade as though I am still in it. My trade triggered a close on Friday. I was not in front of the market the entire day on Friday, so I don't know what time of the day it triggered the close. I don't know if it was right at the open on Friday morning, if it was later Friday during the day. I could probably go into my brokerage page and look and see what time those trades actually executed. I just remember I got home from being out of town today, actually. And but late last night, I was able to look at in my brokerage page and saw that it closed out. I got a couple of Discord messages, some direct messages, and an email from somebody. So I know some of you are still in this Levi trade. Here's what's going to happen this coming week with Levi. Let me kind of show you sort of what to expect on Monday morning when the market opens. Levi gave up a little bit, and that's not a bad thing. The fact that it gave up a little bit on Friday. Let me pop this out so that I can draw on it a little bit for you. But here's what I think you can expect on Monday when the market opens. Number one, I don't think you're going to see Levi push up above and stay above 18 per share. And for our trade, it really doesn't matter where it's at above 17. Anywhere above 17, there is a chance that you could get pulled away on the 17 strike and then have to exercise your 16 strike long call. And if that were the case and you ended up having to do that, you're going to get $1 between those two options. So if you got called away at 17, you're going to exercise at 16, and you're going to make $1. Remember, most of you got into the trade for somewhere between $1.10 and $1.15. I got in at $1.10. I know I got a generous fill order. I don't always get those generous fill orders. I did on this occasion, but I know a lot of you were in at $1.15. So in theory, there's 15 cents per share you could lose if you got called away. I think that's unlikely to happen on Monday, but you don't want to wait much past Monday. Here's what else is going to happen. When the market opens on Monday morning, you're going to have the weekend of extrinsic value bleed off that takes place. Right now, at the close of the market, I believe let's see, am I even giving you the right strike prices? I said seven. This should be 17. I'm so sorry. I knew I had one of those wrong in there. That's 17, not 15. Okay, that's squared away. Okay. At the open of the market, this 17 strike short call that had a value of 92 cents at the close of trading, with the stock trading at 1777, you have approximately 8 or 9 cents of that 92 cents a share is intrinsic value. Did I do that right? No, probably only 5 cents. Probably 5 cents of that is extrinsic value. That means if this suddenly went down 5 cents a share, but this stayed pretty close to where it's at or did not lose more than 5 cents a share, then you're going to be absolutely fine. You're actually going to be in pretty good shape as it relates to the trade, because you'll be 3, 4, 5 cents per share more profitable. Now, it's possible that if the stock gives up a little bit at the open on Monday morning, if it slid back down a little bit farther on Monday morning, you're still in the money on the 17 strike short call. You're still deep in the money on the 16 strike long call. There's still a chance that the closing of those two options would be as much or more than that $1.10 or $1.15 that you paid to get into it. So there's still a really good chance. And even though this will be a lot less, you're still going to have some value left in the put side of the trade. My put side closed out for 8 cents a share. So essentially, it took this from $1.10 down to $1.02, and then that meant that the combination of what I had left in the call side of the trade was more than enough to generate the percentage that I had. So, if I were you and I were still in the trade, if I were still in Levi come Monday morning, I would exit the trade as long as it is profitable. Okay, no need to try and get 15% or 20% or 30%. If you're profitable in the trade at the mid price, I would set a limit order for the mid price and get out of the trade rather than, and I think you'll be able to get at least 15 to 20%. I really think if unless Levi opened way down, I mean like way down on Monday morning, there's a really, really good chance you're going to be able to exit the trade. Maybe not for this 22%, but probably 16, 17, 18%. I think that'll be relatively easy to do on Monday morning. Forget about the 20% we were targeting. Take a win. Take a profit on the trade and get out of the trade on Monday morning, as long as you can do it for a profit. There's no need to take a loss on this trade. It should be profitable come Monday morning. All right. With that said, let's move over to JP Morgan, because we got to look at JP Morgan right now. I'm still frustrated with this trade. At this point in time, it's just this is like the worst trend line you want to see. When we do a long iron condor, which we do a lot of those, this is the worst trend line possible, is getting stuck in a little flat pattern like this. And now we've got, if you look at the closing price, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days in a row, almost 2 full weeks now. But the closing price was between 174 and 176. And this is just about as flat a line as you can get right here. And look at the MACD. You know how rarely you see the MACD run parallel like that for 2 solid weeks, showing literally no divergence away from a dead flat pattern. I hate this. To me, this is the most frustrating pattern that any stock can ever give us. I don't do credit iron condors very often, because this has become such an incredibly rare thing to have 2 full weeks on any stock. I don't care what stock it is you're trading, at least any of the stocks that I watch, to have any stock that you're trading be literally this flatlined, this period of time. It blows my mind. It happens so rarely, and I hate it. I detest it. It makes the style of trading that we do the most difficult in the world. because as soon as you try and predict this, and you put an iron condor, a traditional credit iron condor on this trade, guarantee you the trading gods are instantly going to make this thing drop 90% or climb 120% in a day. It's like just to screw you over as soon as you do that. So I simply, on a rare occasion, will I do a traditional credit iron condor, but that is one of the highest risk trades I believe you can do in today's market is a credit iron condor. Even when you think you're plenty far out of the money, and I've been burned on them too many times to probably go back to them with any kind of regularity. But occasionally, not very often, but occasionally you get this kind of a trend pattern on JP Morgan. So here's the plan on the JP Morgan trade. We're down right now on the trade, but we have lowered our cost basis on the trade considerably from where it started out. So that's the good news, is that we've got a fairly low cost basis on this trade. Right now, we've got the 175, 177.50 call spread. And if we get fortunate enough to have JP Morgan run up to 177.50 or 178 this week, we will be profitable in the trade and we'll be able to close it. I'm going to recommend to all Safe Option Strategies members that are following this trade right now, if you can get a break even or very, very close to it, close the trade. Even with the loss we're looking at right now, we are off to a fantastic start this year. We've only added one new trade in the month of February so far, and we're at a little over 10%. You start annualizing that and compounding it, and I guarantee you we're already on pace to probably be looking at another 70, 80, 90% year if we can continue this pattern. So, even if you had to take a small loss on JPM, I'd say do it and don't sweat it and don't worry about it. I would rather take a small loss and not have it turn into a big loss. Now, with that said, I'm not ready to give up on the trade today. I'm not saying, cash it out tomorrow at the 24% loss that we're looking at. What I'm saying is any little upward movement next week improves the trade. And any little bit of downward movement, we may be able to make an additional adjustment to the trade that would even lessen our loss. And I'll look tomorrow evening what pre-market is doing for Monday morning. I'll look early Monday morning. And I would recommend that if you are in the JP Morgan trade with us right now, be watching your Discord on Monday morning, because it's very possible I'll send something out based on pre-market movement and say, hey, here's what we want to do with JP Morgan. Our Amazon trade, Amazon had a good day. Amazon trade is in the profit right now. I think the 20% we're looking for is a relatively easy thing to get. Let me bring in an Amazon chart right now. I don't see a scenario where Amazon drops back below 170 anytime real soon. Anything could happen. I just don't foresee a scenario where that does happen. So I think we are in Amazon maybe another week and a half, and we're going to get out with our target profit. And Microsoft, if you did the Microsoft trade with us and you we set a super, super conservative limit order on this one. We only targeted 10% return because the maximum possible return on this one, I think, was only about 20%. I triggered out with almost 14% on Friday. And again, this was something that by the time I had a chance to look at my account on Friday, was out of the trade. So if you targeted 10% like you should have, I got filled at 433. 435 was our limit. But even if you had filled at 435, you would be out of the trade with more than 10% if you correctly set up that limit order. So great 3-day trade. I love it when we hit that. Every once in a while, we hit a trade that we're open for 3 or 4 days and we're out of the trade and we've got our target profit. But I'm ecstatic about how quickly we got out of the Microsoft trade and the fact that we hit our target profit on it. So good news on that. Let's shift gears to collar trades really quickly. As it relates to collar trades, we adjusted ExxonMobil. We're sitting good on American. We're sitting good on Delta. We will adjust Bank of America probably this week. Puts on Bank of America don't expire until the 23rd, so that's a week from this coming Friday, 2 weeks from yesterday. We've got some decent profit in this trade. Not a huge profit, but some decent profit. We're going to stick with this one. We'll roll those long puts out and probably roll them up a little bit. We're looking good on Delta. Got some profit in Delta and have that one adjusted out nicely. Now, we will for sure adjust forward Monday afternoon for Tuesday morning's open. we will make an adjustment to Ford. We've got 12 strike long puts that are out of the money now with the big jump Ford had up. They gave back a little bit. I think Ford finished just a tiny bit to the downside on Friday. Not a massive sell off, but they definitely gave back a little bit. But that was after 2 nice days in a row of upward movement. Ford is looking good. We'll get it protected and get that protection extended out. I think we'll be able to additionally. I don't know. We might just leave those short calls where they're at. We might just roll the long puts and leave the short calls where they're at. Lucid has to be adjusted, if not this week, next week. This is a worst collar trade I've been in for a long time. I hope not a lot of you are in Lucid. I'd kick myself over and over again. We've made up a lot of what the stock has lost, but our original stock purchase in this thing was $43, and it's literally worth $352 right now. We've made up a huge portion of that, but not enough to not still be down in the trade a fair amount. Micron, we're looking good. Nothing needs to be done on Micron. ExxonMobil, we just adjusted out. Let's talk about Snap for a minute. Snap has long puts that will expire at the end of this coming week. Snap had a horrible earnings report, horrible guidance. 2 days in a row they traded down, and Friday they bounced a little bit, but ended up finishing the day barely 1 penny changed from where they finished the day on Thursday. So really, and I don't know if Snap is done going down. This one is a little bit challenging for me because I'm tempted to adjust it right now because there's a lot of value in the long puts, and I hate to see some of that value disappear in the long puts. But I'm not convinced that Snap won't go down further. This is not much of a support line. I think the real support for Snap is either down here around 10.5 or honestly, I think the strongest support is down here around $10 a share. And I have a feeling Snap is going to make its way down towards $10 a share. Now, with long puts that expire at the end of next week, we don't want to wait past maybe Monday or Tuesday, and some of that will depend on what Snap is doing pre-market on Monday morning. If Snap is up dramatically pre-market on Monday morning, they're up a little bit after hours at the close last night, but if they're up a little bit more pre-market, we might make an adjustment as early as Monday. If they're sliding during the day on Monday or down in pre-market on Monday, we may wait and adjust Snap towards the latter part of the week as long as those long puts are still deep in the money. So look for that as a possible solution to Snap. If we get any more upward movement, we'll adjust. We'll add some shares. I think Snap will go back to $14, $15 a share eventually. I don't think it's going to be right away. I think they're going to come down and probably continue to trade for another quarter, maybe in between this 8.50 and 10, or at the very least between maybe 10 and 11 for a while. Remember, we're only talking 3 months ago that Snap was sitting down at $8.50 a share. They had a massive run up in that big tech rally through December and November and December. They flattened out in January, and then earnings painted the picture of where they're really at, and it's not real pretty. So that's kind of where we're looking at right now on Snap. We'll make an adjustment soon, but I don't know if they're done going down. So I'm not going to pull the trigger on that right away. Sometimes I'll admit occasionally my patience in wanting to adjust something may cost a few dollars, but more often than not in the time that I've traded, the patience that we show in waiting a little bit, more frequently it pays off for us. And so I'm willing to do that with Snap and take a risk on that. All right, I'm not going to talk a lot about the week overall. It's over and done with. It was another historic week. It was a pretty incredible week. This upcoming week, there's a lot going on this coming week because once again we have. This is still showing February through the 9th. This is showing the 5th through the 9th. So next week we have CPI data, I believe, on Wednesday and PPI data on Friday. And nothing has changed from the fact that these two reports are going to be huge potential market movers. There is a chance that if CPI data comes in hotter than expected, it squashes the hope of even a couple of rate cuts this year. At least temporarily, it'll squash that hope. If it comes in much better than expected and shows that inflation is continuing to drop its rate of increase, there could be this notion back on the table that as early as May we get a rate cut. Same thing with PPI on Friday. So that's going to be all the talk for next week. And we'll talk a lot more about it on Monday when we can look at the entire economic calendar for the week. So I'm going to wrap up right there. And I'm not even going to do a separate presentation. I'm just going to make this the same presentation for members and non-members, even though, hey, it doesn't hurt for people who aren't members of the Safe Option Strategies program to get a little insight into how we trade from time to time. So I'm just going to leave that in for them and welcome them to reach out if they have questions about that. I hope everybody's having a great weekend. Thanks again for tuning in and listening, and we'll get a new trade. Updates on where we're at with these trades, some adjustments to some collar trades, and a market recap for Monday, all within a couple hours after the market closes on Monday. Until then, have a great day. Bye-bye.